What is up, YouTube? This is The Working Investor. In this video, we're going to talk about why I'm interested in this fund from NEOS. It's called the IYRI. It's a real estate investment trust ETF fund with overlay cover calls strategy on top of it to give you enhanced income. We're going to talk about why I find this fund kind of unique and why I have it. I'm thinking of having this as a small position in my portfolio. Everything here is not financial advice, legal advice, tax advice. This is just my personal observation that I'm sharing with you. And you need to do your own due diligence before making any type of investment risks. So we're also going to talk about, we're going to go ahead and compare this. We're going to compare and contrast total returns of the underlier of IYRI, which is IYR, to other ETFs that hold REITs inside of it, such as VNQ. So let's first get into IYRI. So this is a NEOS Real Estate Investment Trust high yield income ETF. I mean, you can go on the website, you can see their expense ratio is 0.68%. They explain in their, here they just explain to you that, they want to give you high level of monthly income because they're basically, they want to track the Dow Jones US Real Estate Investment Cap Index, which is AKA IYR. And they talk about that, they want to give you some upside. They want to give you some monthly income. IYR actually gives you quarterly income. And IYR, if you go, that's basically iShares, hence, I guess, the letter I as the initial. And it's basically, it's been around for a while. They've been around for a while. And you could see that they do not give around 12% dividend, such as NEOS does, right? NEOS, I watched the video with the one of the portfolio managers, and I'll link it in my description. He mentioned that they're targeting somewhere between 11 and 13%, so they hit around 12% in the past couple months, just under 12%, about just under 1% per month. So around 12% annualized, a little bit less. But if you had the underlying IYR from iShares, which they do their cover calls on, you would be getting somewhere around 3.37%, and the dividend distribution looks like it's more like quarterly versus monthly. And I went on the prospectus and I downloaded the holdings on their website page of IYRI, and here you could see the Excel spreadsheet. And the fund manager says something very unique. He said that they actually own the underlyings, every single underlying that IYR has. They own it in themselves. They try to mimic IYR, and he mentioned that when IYR, he says they rebalance quarterly and reconstitute yearly, they try to do this. They'll try to do the same thing, if I understood correctly. And in addition to holding the underlyings of all these funds like Realty, etc., AGNC, they also, you see on the top, they have some strategies going on, some option strategies. So they're selling cover calls. You see here they have a couple expirations, April 17. They're selling some cover calls. And you can see that this is not a very high weight of the portfolio. It's a smaller weight of the portfolio. He said in the interview that not necessarily does he want to sell cover calls against the entire portfolio. If he can derive that income goal, he wants to give it as much time, much breathing room for upside potential. And he'll go as far out in delta as possible just to hit the income goal. And if it's higher implied volatility time, he may go further out in strike price. I think he mentioned that he writes his calls 30 to 45 days to expiration from the interview. And this is the video that I'm going to be linking in the description. Looking at Seeking Alpha, I went to the 5-year chart and I'm looking at total return from 7 major, these are the 7 major indexes that do real estate. Inside of these indexes, or ETFs, should I say, they hold baskets of real estate investment trusts, and each one has a composite yield and a total return. And I lined it up from highest total return to lowest total return in the past 5 years historical. And you can see here USRT was the highest that I've seen from these 7, 71.86% total return, followed by RWR, 65.2% total return, FREL, 58% total return, VNQ, a very famous one from Vanguard, 57.5% total return, IYR, the one that we're looking into, that NEOS will be doing their cover calls on, 55.73% total return. There's a Charles Schwab product, which is 51.55% total return, and REIT, 50.05, lower bottom of the pack. So you could see that IYR is not the top of the pack. It's not the bottom of the pack. It's kind of in the middle of the pack when it comes to, from what I've compared, when it comes to total return in the past 5 years. You can look at the 3-year, because the 3-year chart, the real estate market has been down. So you could see that USRT has been down only a little bit, 0.64%, RWR negative 3.86, FREL negative 4.32, VNQ negative 4.58. But IYR, even though on the growth side, it kind of middle of the pack, you could see that it's not as hard down compared to the others. Only the better one, only bested by USRT. Continuing on to the Charles Schwab negative 4.01, and then REET negative 7.23. For a second, I thought it was REEK because it reeked in returns, but I guess it's called REET. Anyway, so you could see that I like about it is that on the upside, okay, it's middle of the pack. On the downside, it's not. It has proven in the downside that it kind of not the worst. And now we can go. Let's say we'll go year to date, because I want to look into. I want to compare basically the IYR to IYRI and see how these two have compared. So I'm just going to get rid of, I can only do 7, so I'll just get rid of REIT, and we're just going to do IYRI. Going to add it in there, and let's just move it close to, just for visual purposes, we'll move it next to IYR, and let's look at year to date. So year to date, and looking at total return, remember the stock market has been down, S&P, NASDAQ, Russell has been down, Bitcoin was down year to date from beginning of 2025 till mid-March 2025. So you could see the real estate investment trusts have been up a little bit. So a little bit of, not perfectly correlated to the market. USRT up 1%, 1.05, RWR up 0.91%, FREL up 0.252%, VNQ, the Vanguard product, up 2.09%, IYR up 3.37%, and IYRI tracking very closely, up 3.18%, and then SCHH up 2.66%. But this is a very small time horizon. I don't like small time horizons, but I don't have a choice because this IYRI product, that's a tongue twister, it's only been out for such a short period of time. So I only have a little bit of time to go off this. I'm going to talk about why I like real estate as a small position in my portfolio. This is my thinking. And the answer is it's not perfectly correlated to the market. It's actually arguably maybe even a little bit negatively correlated to Bitcoin. So I'm trying to compare, contrast it to the market and also to Bitcoin, because I do have some Bitcoin exposure. So according to ChatGPT, I compared, this is IYR specific index of IYR, and comparing it to SPY. So short term, they say that the past 3 months, the correlation has been moderate. It's only been 0.42, the correlation coefficient. So correlation coefficient goes from 1, which is perfectly correlated in magnitude, and then there's -1, which is perfect inverse. And something that's 0 is not correlated, not inversely correlated, it's kind of like whatever, it does its own thing. But 0.42 means it has a little bit of a moderate correlation. But if you go to a long-term correlation, the real, IYR and SPY were much stronger correlated with a factor of a correlation coefficient of 0.92. So there is some divergence, but sometimes they could vary in different periods of time. And we'll look at Bitcoin. So this is what I like, that for comparing to Bitcoin, there's actually there's different points of view with different analysis. So some analysts say there's actually a slight negative correlation, which means it's a little bit inversely correlated to Bitcoin. So negative, 0.123. So it's a weak inverse correlation. But some analysts say that it's maybe a small positive correlation, so mild to moderate positive correlation to Bitcoin over a 4-year period of 0.14 to 0.52. So it's very subtle, either slightly negative inversely correlated or slightly positive. So I find that in my conclusion was I thought this maybe could be a good kind of hedge, slight hedge. If I have a lot of risk in other asset classes, that kind of stabilize the portfolio a little bit. So this is Google Finance. So this is only looking at price action. It's not putting in consideration total return. The SPY has a little bit of dividends, and obviously like real estate investment trusts have dividends. But looking at price action in the past 5 years, if you look carefully, I agree, they kind of move in tandem. But sometimes there could be some subtle differences. Like if you zoom into this past year, the 1 year, you could start seeing some divergence, especially like over here. Like you can see here in September, there was like a little bit of diversion where the blue is the S&P 500 and the yellow is the ETF, the IYR. From the iShares, and you can see there's a divergence, and you can see, well, they're both down over here. And if you go to maybe the 1 month chart, there is a lot of similarities. I don't know about the market, but I know more like to Bitcoin. Let's compare Bitcoin. Yeah, so this is just BTC versus IYR, and you could see that this is the 5 year chart. It's very hard to see. It looks like the real estate is kind of flatline and Bitcoin's all over the place. But if you look at the 1 year chart, you could see that here you could see this is what I'm talking about. It's not really that correlated, maybe sometimes inversely correlated. It's like a whole different type of beast, as you can see here. So I think more, I would say, based on these charts, I think that, tell me what you guys think, but I think it's more like a better hedge towards Bitcoin related assets versus S&P 500. Anyways, I hope you guys enjoy. Let me know what you guys are looking into as alternative assets to give you a little hedge, and income assets to give you a little hedge to the market and maybe Bitcoin, or one or the other. And especially ones that kind of deliver you higher total return, maybe half of the S&P, if not maybe even greater, maybe at least or even better than the S&P. Anyways, have a wonderful trading week. All the best.